What I have for you today is quite a famous English case, old, it's from 1998, but still quite well known. And it's the case of Memec PLC, and we're dealing with foreign entity classification and the treatment of dividends from silent partnerships. So let's have a look at what was going on. Originally, you had a situation where Memec PLC owned Memec GmbH, and Memec GmbH in Germany owned two German subsidiaries. Now, if the German subsidiaries made a profit of 100, they paid trade tax of 20, and then federal tax of 29 in Germany, and then they had profits to distribute of 51. If they distributed those profits to Memec, then Memec could pay a dividend of 51, but then there was 7.5 dividend withholding tax paid, and so the net received dividends for Memec out of the original 100 was only 43.5. There was no UK tax on it because there was too much German tax already, but still it only earned 43.5 out of it. So Memec decided to change the setup and insert a silent partnership between Memec and Memec GmbH, and we'll see what a partnership is in a moment, but sufficient to know for now that Memec GmbH was entitled to 13% of its own profits, and the other 87% was then to be transferred to Memec PLC as the silent partner in this partnership. And it's a little unclear how it changed the numbers on the structure, but in any case we can assume that the profit was still 100 and that there was still trade tax and federal tax and a distributed profit. And then it seems like Memec GmbH received a dividend of 85, which is significantly more, and it could then pay 87% of that dividend on to Memec PLC, which was 78, and then there was a dividend withholding tax of 15% on that still, and then it would receive 68%. Right? And now the question came up, because there was still UK tax left to be paid on this dividend, whether Memec PLC could get a credit for the taxes paid in Germany, right? And here you can just see PLC received, after deduction of 15% withholding tax, 68% of the pre-tax profits of the subsidiary instead of only 43.52% before the agreement. And briefly looking at the facts further, the taxpayer Memec PLC claimed relief from corporation tax for the accounting periods 86, 87, 88 respectively in respect of the trade tax levied in Germany on the profits of two German subsidiaries, which profits were ultimately the source of income received by PLC during the accounting periods. The revenue, however, refused those claims on appeal by PLC. A special commissioner dismissed the appeals, and on appeal by PLC from the special commissioner, by way of case stated by Robert J. Walker, he also dismissed the appeal, and then Memec now ended up before the UK ultimate court, right, where this decision was made that we're looking at now. And part of that is obviously the dividend with the double tax relief article from the German-UK treaty. It was an old treaty at the time, so you can see still by the Roman numbering, but it says Article 18 is headed elimination of double taxation, subject to the provisions of the law of the United Kingdom, federal tax payable under the laws of the Federal Republic of Germany, right, excluding in the case of dividends tax payable in respect of the profits out of which the tax is paid, so in other words, excluding underlying or indirect taxes, shall be allowed as a credit against UK income tax. Very simple. This is just a direct credit for the German withholding tax on the dividends. But then we come to the indirect credit for the tax or the income tax on subsidiaries. And letter B says, in the case of a dividend paid by a company which is resident of the Federal Republic of Germany to a company which is a resident of the United Kingdom and which controls directly or indirectly at least 25% of the voting power in the Federal Republic company, which Memec PLC did, the credit shall take into account, on top of the credit of letter A, the federal tax payable by the company in respect out of which the profits of such dividend is paid. So in other words, an indirect tax credit. And Memec says clearly under the treaty, I qualify for this indirect tax credit, right? But again, Memec loses because just finishing the facts here. A credit against UK corporation tax for trade tax borne by subsidiaries which pay dividends to GmbH may be obtainable either if the dividends are paid by the subsidiaries can be treated as paid to the PLC, right? Or if the share of the profits of the silent partnership paid to PLC can be treated as a dividend by GmbH. It was contended by PLC before the Special Commissioner that PLC's shares of the profit of the silent partnership was a dividend as understood in English law, that's national law, we'll look at that in a bit, and within the meaning of Article 18 of the treaty, right? Both limbs of that argument were rejected. And then in the next court, Mr. Venables, QC for PLC, redeployed the arguments which he advanced to the judge in the previous court. That's what I wanted to say. He contended that PLC is entitled to succeed on one of 6 arguments. Each of the arguments depends on PLC having received dividends and rests on one of 2 bases. Either the dividends were the conventional dividends paid by the subsidiaries and received as profits from the silent partnership, or the share of the profits of the silent partnership should be treated as a dividend from GmbH to PLC. So these are the 2 arguments that the taxpayer relied on, and let's see what this court does with them. The first basis was transparency, right? And it said before this court, Mr. Venables, QC for PLC, redeployed the arguments which he advanced to the judge. He contends that PLC is entitled to succeed on one of 6 arguments. We've just looked at that, right? So he then says to succeed on the first basis, the judge says, PLC must establish that the silent partnership is properly regarded as transparent, so that PLC as a silent partner is to be treated for UK corporation tax purposes as entitled to a share of the dividends paid by subsidiaries. And if you've looked at the case of Anson already that I discussed elsewhere, you would have seen that the way the UK deals or dealt with foreign legal entities is to see what it looks like most like for UK tax purposes under UK law and then treat it accordingly, right? So we now start a whole comparison between a German silent partnership and UK partnerships, right? Mr. Venables submits that the reality of the situation must be looked at and that in reality the share of the profits of the silent partnership received by PLC in this country is the same as the profits earned by the subsidiaries, which 87% of it at least is, right? He says that the agreement giving PLC a contractual right to the share of the profits of GmbH made no difference in substance. So he says, let's look at what really happens. Don't just look at the contract, right? And that PLC as a silent partner was in the same position as a partner in an ordinary partnership or a limited partnership, or a limited partner in a limited partnership under either English or Scottish law, right? And it is not in dispute that an English or Scottish limited partnership is transparent for tax purposes. A 10-second commercial. If you want to learn more about international taxation or transfer pricing, or treat yourself to an all-round update, or if you want your team to learn or stay updated, please visit my online courses. So if we now look at the different entities, you first have the UK General Partnership, right? It has no legal personality. The partners run the business. The partners are each other's agents, so they also represent each other. The partners are jointly liable, and the partners own the business, right? If you look at a UK limited partnership and we look at the limited partners, it has no legal personalities. The LPs do not run the business. The LPs are not an agent for the other partners, but the general partners are for the LPs, of course. The LPs are liable up to their capital contribution, but no more. And the LPs also do not own the business. The business is owned by the general partners, but the court doesn't say anything about that here. The Scottish partnership is different, right? Because if you look at the Scottish limited partnership, the first thing is it does actually have legal personality, right? And that means that it's not the limited partners that run the business. I mean, it's still the general partners, but for the LP, right? Because it says the GPs are agents for the limited partnership, right? And the general partners are jointly and severally liable, not only jointly liable, but severally liable, because they also are liable for the liabilities of the Scottish Limited Partnership, of course. And the partnership owns its own assets because it has legal personality. So the Scottish Limited Partnership are really different and gives maybe the PLC some kind of chance. But if we look at, the German partnership, some kind of chance. But if we look at what the judge says about the German silent partnership, it says it has no legal personality, so that is good, it helps transparency. The silent partnership does not run the business, that does not help. And then it doesn't talk about the rest, but it says the silent partnership is liable to the general partnership, but the silent partner is liable to the general partner, but it is a pure contractual liability, right? It's not a liability in law. And the general partner owns its own assets. The silent partner's entitlement to a share in the profits is purely contractual. So there's no part that the silent partner has any part in the assets of the general partner. And for third parties, that's why it's called a silent partnership. They may not even know that the silent partnership exists, so it's completely irrelevant. And at that, concluding from all of this, the court comes to the conclusion that PLC's source of income is a silent partnership agreement and not the subsidiaries' shares, right? So the court then also says, I of course accept Mr. Venables' submission that technical differences in the nature of rights should not cause cases which are in substance identical to receive different UK tax treatment, right? But he says, I see insufficient justification present in the circumstance of the silent partnership for treating the share of the profits of the GmbH business received by PLC as the same as the profits of the subsidiaries or the dividends which were paid to the GmbH alone as shareholder and not to PLC. The agreement was, in my judgment, the source of PLC's shares of profits of the GmbH business, not the trading operations of the subsidiaries or the shares owned by GmbH in the subsidiaries producing the dividends paid to GmbH. Accordingly, I would reject the first basis advanced on PLC. So the silent partnership is not transparent, and the source of income for PLC is the silent partnership agreement, and it's not the dividends paid by the subsidiaries to GmbH, right? And again, I would invite you to look at the Anson decision as well. I mean, the UK courts really make very fine distinctions between what source of income can be, whether it is the underlying assets or whether it is a contract, and even if it is an LLC, the income received from the UK partner in the LLC may not be the same income the same UK partner received in the same LLC for US tax purposes, right? So